What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we continue to see our short squeeze pushing higher as we're getting very close to some of our critical price targets. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we were up 1.46% and we are going up on increasing volume, and we have been going up on increasing volume for 3 days now, which means it has now been 3 days since I've been called an idiot by the fundamentalist bears. This is why I tell you follow price action and have a trade plan, because the stock market does not care what you think and it does not care what I think. Our job is to look at the chart and try to figure out where the market is going. And if you want to trade in this market, you will eventually learn to follow price action, because right now you are still sitting there wondering why the hell is the stock market going higher with a recession. The price action is all that matters, and right now we still have bullish price action closing way outside the upper Bollinger Band. So there is no way when we're seeing high volume buying and price action pushing through some critical levels like they're not even there, that we are even close to starting to get bearish on this market. Now I will acknowledge that bear is getting a lot closer as we approach SPY 421, so there is definitely going to be some type of resistance as we approach these next critical price targets, which are going to be right around SPY levels of 416, 418, and 421. So there's going to be a very tight zone of resistance coming up right around the corner. So do keep that in mind, but resistance does not mean that we have to see some type of major sell-off. We could easily get another one of these low volume sell-offs that's anywhere between 1.5% to 3%, then continue to push through that resistance and continue to climb higher. Also notice our 200 simple moving average and our resistance trend line for the greater degree of the bear market is still up there, so it's well within reach in the 430s. So it is very likely that we could see SPY pushing all the way up to the 430s. Have an open mind and let the chart do all of the talking for you. There is no reason you need to have any biases based on fundamentals, because you can look at the chart and we can see where the chart wants to go. We don't need to look at any news, we don't need to look at any earnings, and we don't need to watch any television networks about where the stock market is going, because we have charts and we have eyeballs and we can see it. So just last night, I did suggest raising your risk level on SPY up here at 399, but I do believe you can continue to raise your risk level the higher we climb. So the next best risk level is not drawn on the chart, but if you're in the Stocks channel Discord, you know why it is critical, and that is going to be SPY 407. I do not always draw risk levels on the chart, so if you do want those risk levels, they are in the Discord server, or you can write them down as I go through the episode. But on SPY 407, you will want to watch that as your risk level. Now, if we start breaking down, we still have plenty of support and tons of bullish market structure below. So I do believe a lot of pullbacks will get eaten up, and I do expect this rally to continue to go higher, possibly through the majority of August and maybe even longer. So what we currently see on the chart is a very bullish development, with all of these moving averages starting to cross over and the bulls gaining momentum as they're only pushing stronger in this trend. And it is very likely that we will see SPY in the 420s and then possibly even the 430s. So take it day by day, follow what the chart is telling you, and try not to get too emotional. Just trade what the chart is giving you, and always know your risk levels and then manage your risk around those levels. So if it's not loud and clear, the short squeeze is still well underway. We still have a bull trend of higher lows and higher highs, and we are still seeing bullish price action breaking out with higher volume buying. This is a very bullish chart. So if you are still holding short positions or you are still bearish on this market, you really need to wake up and look at this chart objectively before you lose any more money. Also, we had some major breakthroughs on the weekly chart, so it's going to be very important to tune into the weekly analysis that I do over the weekend, because there are a lot of breakthroughs on the weekly chart you will not want to miss. Jumping over to the NASDAQ 100 triple Qs, we were up 1.82%, and again we continue to push higher and break through previous resistance levels, which is right there, right around 314. So we now no longer even have the possibility that the triple Qs are just going to double top as resistance, because we are getting the bullish breakout. The bear in the triple Qs is waiting up there in the 320s, and our 200 simple moving average is in the 340s, so we do have plenty of more upside to go. So on this bullish breakout, look for the triple Qs to start pushing towards the 320s, with the critical resistance being there right around 324 to 326. On the triple Qs, I suggest using the risk level at 311, because as long as we're above 311, we are likely still pushing higher. and you still have critical support down here right around 307 and 300. You can see today we did go up on slightly higher volume than yesterday, so there's still some high volume buying as we break through resistance, and we are clearly still getting a short squeeze. Also look at the moving averages and you can see they're all very positively sloping and crossing over to support the bull trend. So this is not the time to be getting bearish while we're developing a very strong bull trend and we're breaking out with bullish price action. In the Dow Jones DIA ETF, we were up 1.05% and again closing outside the upper Bollinger Band on increasing buying volume and developing the very strong bull trend, with the next critical resistance being at 333 and then up there around 340. Stay bullish as long as we're above about 320 to about 319 because that is going to be the critical support level in the Dow Jones. And as long as we are above that critical support with the strong bull trend, we are still likely going higher in this trend. On the Russell 2000 IWM ETF, we were up 0.71%. And as you can see, we continue to push higher in all of the indices with another bullish breakout in IWM to another daily high. And it looks like we're well on our way to the price target at 191 with our 200 simple moving average being up there right around 201. We have the bull trends across the indices with the bullish breakout and the high volume buying. So everything is looking good across the board and it does look like we will continue to push higher. On the Arkk ETF, we were down 2.27% and you can clearly see if I zoom in here that the Arkk ETF is starting to lose the support trend line. Even though we still do have critical support down here right around 42 to 43, it does look like we are going down for another leg that could take us back down to about $40. So just keep in mind while Arkk is below this support trend line and definitely while it's below 47, that it is still in a bear market and it is still very likely trending lower. It's not until we get the decisive breakout and successful retest of that resistance at 47 that it's getting bullish. So stay bearish on Arkk as long as it's below 47. On the VIX, we were down another 4.5% today as the VIX continues to push lower down towards that support zone at $20. And that is exactly where I would expect to see the VIX finding support. So do expect more volatility and more than likely another pullback, which doesn't guarantee that it's going to be bearish. It could still be a pullback in a bull trend. More than likely after the VIX reaches 20. If we do crush down below 20, the next likely support for the VIX will be down here at 18. And it does look like at some point we will have the VIX spiking back into the low 20s, all the way up to about 22 to 23 and possibly even 24. But do keep in mind we need the VIX all the way back above about 26 to 27 to make it a bearish leg lower in this market. So any VIX spikes will be buying opportunities as long as the VIX doesn't get too elevated. If we start to see the VIX spiking really high, that is very bearish because it's more than likely that we're going to see some panic selling, but I do not expect to see that, just be aware of it. On Bitcoin, we're currently flat, going absolutely nowhere from yesterday's close, but yesterday's close was a bullish breakout back over the 50 EMA and the previous daily high, which means we do have the higher low, higher high, which means Bitcoin is more than likely getting ready to go on a bull run. The bull run is very likely going to take us to 28,000 and then likely the resistance trend line right around 30,000. So stay bullish on Bitcoin as long as we're above 23,000 or that critical support down here right around 22,000. If we lose those support zones, this is not bullish and we're coming back down to 19,000. So stay bullish as long as we're above anywhere between 23 to 22,000. On NVDA stock, we were up 1% today, and NVIDIA did actually get a bullish breakout above the previous daily high, but we did not break that resistance at 183. From here, we'll likely test 183 as resistance, and if we do break out, we could start trending higher towards 196. Above 196 is going to look like a very bullish breakout, and then we can start talking about the 200s to close the gap above and hit the 200 simple moving average. For the time being in NVIDIA, I want you to stay bullish as long as it's above 173, and below 173 you have support at 165 and 161. On Tesla stock, we were up 5.78% today as we got that very strong bounce off of the breakout and we blasted right through 864 like it wasn't even there, and we're very close to my next price target at 904, which is also going to coincide with the 200 simple moving average. It is very likely that is going to be a very strong resistance, so do expect to see resistance at that zone, and if we do break out, the next price target is up here at 970. You have very strong support to the downside right around 816 and 775. But if you start breaking down below 864 and that level does not act as support, I would start expecting more downside to test those lower support zones. On Apple stock, we were up 3.28% today and we did gap up and we did get a direct hit on that price target right around 163, but we could not close above that resistance. We need to close above 163 or intraday break above it to run to the next price target at 166. And then above 166, it looks like a free ride up to close the gap at 174. Be mindful of the gap below and the 200 simple moving average right around 159 to 157, but as long as we are above 157, you should be staying bullish on Apple stock. Below 157, we could come all the way back down to about 150, so do be aware of that. So as long as we're above 157, you will want to stay on the bull that could possibly be going all the way up to 174. On the financial sector, we're up 1.41%, and we did close the gap above, so that usually will act as resistance in the short term, so look for a pullback possibly down back to retest the breakout at the 50 EMA. On the industrials, we're up over 2% today, and we did get another bullish breakout above 95, and the next resistance level will be right around 97. The healthcare sector was down 0.33% today, closing back on top of the 200 simple moving average for the second day in a row, and the next breakout will be the break above 134. On the energy sector, we were up 4.34% today as the energy sector did blast through that resistance at 77, with the next likely resistance being 79.5 and the gap fill right around 81. So jumping back over to the S&P 500, keep in mind that on this channel we are doing technical analysis and we are letting the price action and the trend do all of the talking. Right now the price action and the trend are saying that we are bullish at least in the short term, so we are going to stay on this bull, manage our risk accordingly, and let's see how long this thing is going to last and how high it could possibly go. While I understand many of you have your views on why the market should not be going higher, do keep in mind the market does not care what you think, just like the market does not care what I think. We're going to follow price action and be great traders by managing risk, because that is what defines a great trader. Don't trade against the trend, always manage your risk, and always be objective. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.